Hello everyone, welcome back to the channel. In today's video I'm going to be explaining and constructing the perfect strategy when it comes to order blocks and how to trade them. I am also going to be breaking down an actual trade that I sent to the group chat. If I just show us proof that NZD CAD buys, doesn't want to load, but here we go, sent on the 24th of July. This was sent to the group chat, beautiful trade, ended up running for 200 pips, risk reward of 1 to 30. I'm going to be breaking this down, and this trade was sent out analyzed using the concepts that I'm going to be teaching you in today's video. I have also made a full, almost course level document that I'm going to be giving out for free. All you need to do to get access to this is make the video hit 250 likes. So as soon as the video hits 250 likes, I'll be posting this in the description. So yeah, make sure you like, comment, subscribe, turn on post notifications if you like what you see, as it does really help out the channel. So yeah, I'm not going to waste any time. I'm going to get straight into this trade. I'm going to break it down in a top-down manner, which means I'm going to start on the daily time frame and then refine all the way down. I ended up refining and getting my entry on the 5-minute for this, so I'm going to be refining from the daily all the way down to the 5-minute within this analysis. So yeah, as I said, let me begin. On the daily time frame for NZD CAD, I noticed that the market was bullish, right? If for those of you that watched that video that has almost 200,000 views and it is the most viewed video on my channel now, you will know that we trade a three-rule system, a three-rule system in which the first rule, aka the most important rule, is you look at your trend. If your trend is bullish, you're only entering buys from areas of demand. If your trend is bearish, you're only entering sells from areas of supply. That's the essence of our strategy. So what I've done is I went on the daily, identified the trend as bullish, and therefore I already have in my mind I'm only going to be buying this market. That's all I've really seen on the daily. The daily hasn't given me any sort of like entry opportunity or anything like that. It's just given me a directional bias on where the market is likely to go, which is higher because we've said the market is bullish. Then what I did was I dropped the 4-hour time frame, and what did I notice? I noticed that the market had formed an almost perfect area of support. It's not that clear on the 4-hour, so what I'm going to do is drop down something like the 2-hour, and here you go. On the 2-hour time frame, you can see that we have an almost perfect area of retail support. We don't trade support and resistance, but retail traders do, right? Retail traders are going to be buying this market as it comes into this area of support. What smart money has then done is it has purged liquidity. They have sacrificed the sells here that they have opened in order to take sell side retail liquidity. What do I mean by that? Let me just explain this concept of liquidity and support and resistance right here in a concept form. Here we go. We understand that retail traders trade support and resistance, right? The market is going to be zigzagging in this sort of consolidation zone. Retail buy at this area of support and then sell at this area of resistance. Smart money understands this, and therefore understands that above this area of resistance and below this area of support, there's going to be a lot of liquidity. What is liquidity? Liquidity is basically any sort of order in the market. It can be a buy stop order, sell stop order, sell limit order, buy limit order, any sort of, maybe even a market execution order. Any sort of new positions entering the market counts as new liquidity entering the market. And we understand that, say for example, this is our area of support. Retail is going to be buying a lot here with stop losses placed somewhere like this. If smart money artificially pumps price down, taking out everyone that was buying there, we understand that buy side liquidity is leaving the market because people that were buying here are leaving the market. We also understand that another strategy that retail traders use is that they enter new positions if there is a break below support or a break, let me just draw in that resistance, a break above resistance. They use break and retest. So we understand that below here there's going to be a lot of new sells being opened by retail. The reason that is helpful for smart money is because smart money is going to use retail sell side liquidity here to buy the market. So what they're going to do is artificially sell the market into here. They're going to sacrifice positions. So they're going to sell the market here because there's an influx of buyers here. So because everyone's buying here, there's enough liquidity to sell. So they can sell the market into this area. What that would do is initiate a lot of retail selling. As a result of that retail selling, smart money is able to buy. Right? And why is that? Is because in any sort of market, be it a financial market, a physical market, buyers need to have sellers for a transaction to occur, and sellers need to have buyers for a transaction to occur. I'll give you an example that in a physical market. Say you go to your local, local market, and you want to buy fruit. You want to buy some fruit. If the sellers at that market are not selling the fruit, you will not be able to buy it. Therefore, we understand that you need to have both a buyer and a seller for a transaction to occur in this market. Same thing in a financial market. Smart money needs the retail selling to then buy the market. That's the whole point of them pushing the market below here to get retail liquidity to then buy the market, right? So smart money have now gotten their retail liquidity and bought the market up. However, we mustn't forget that in order to get the retail liquidity, they needed to sell right here. Right here, smart money had to sell the market, right? And so when the market is all the way up here, the sells that they open down here are going to be in a lot of drawdown. So they have a vested interest to bring price back to the area that they open those sells, to close those sells at break even before then continuing the market upwards, which is their desired move, right? So what we can do is we can enter alongside smart money by entering off of order blocks, which are basically areas that show us where they actually started the selling down to gain retail liquidity, right? We can use that order block to enter from that order block before then the market pushing upwards, which is exactly what we did for this trade right here. I'm just going to delete everything off here and I'm just going to show you what it looks like on the actual chart. So what smart money have done is they've initiated retail sell side liquidity by pushing the market back down by selling at that area of support. So they've sold the market at that area of support when everyone else is buying to push the market down. What that has done is that has initiated new retail sells in the market. What smart money can then do is use that retail sell side liquidity to then buy the market up, which pushes the market upwards, right? But we mustn't forget the sells that they opened here are still opened when the market is all the way up here. So what they need to do is they need to bring price back down into the area down here before then having that their desired move, which is for the market to continue moving upwards. What we can then do is we can find order blocks down here, maybe on like some very low time frame, like the 10-minute or 5-minute. For this case, we use the 5-minute to get our entry. So what I've done is I've just gone to that area right there on the 5-minute time frame, and I've just found. Let me just get rid of this for the time being. I found this very nice area of 5-minute demand. Right, we have an order block right here, initiating, showing us that's where smart money began to sell. They began to sell in this whole area. This is an order block right here, and therefore this is an area where they're going to look to mitigate, to bring price back into before then the market pushing upwards. So if I go onto the 1 hour time frame and I just extend that to the right, perfect entry, literally in drawdown. How many pips is that? In drawdown for like 2 pips, and the market just flies up for 200 pips. What I did was I sent the chart that I actually sent to the group chat. I suggested that they actually enter from the price I entered that. So we had the same entry. Let me just show us that entry price right here. Entered from here, but I said that they should put their stop loss below the low right here. So this is the low. I suggested that that's where they put their stop loss. Let me just show us that low. This is the low I'm talking about. I suggested they put their stop loss at that low. What I ended up doing is I actually put my stop loss below the order block candle, and therefore I was able to get a higher risk to reward. But I just didn't want the trade to get sacrificed, just in case my analysis didn't play out. There was a low likelihood of that happening. However, just in case, I decided that I would send out a chart where all of the group members would sacrifice their risk to reward a little bit by putting the stop loss below here. Ended up playing out perfectly. I ended up pushing to the upside. So what we've learned right here is we've learned that we can find areas of liquidity, aka areas of support and resistance. And support and resistance isn't the only sort of liquidity that retail enters from. They enter from trend lines, for example. So say, for example, we have a market that's pushing up aggressively. We understand that there's going to be a trend line that the market is following. There's going to be something like that. And therefore, below this trend line, there's going to be a lot of liquidity. So below this trend line, there's going to be a lot of new sells being opened. And also stop losses for people that were buying at that trend line. And then also at that trend line, there's going to be a lot of buy side liquidity too. So you can use it for trend line, support and resistance, any sort of retail strategy that smart money could want to use to find the liquidity for their moves, you can use this strategy on. It's a perfect strategy, and to make it even better, you can just add added confluence. So what you can have is an area above here. What I had was that area there had a little bit of equal highs at it, which means that smart money has an incentive to take out that liquidity. This is just added confluence to our setup. Added confluence such as this just means that it's a higher probability setup compared to if you just have areas of support and resistance, and order block below that area of support or above that area of resistance, entering from there, pushing the market upwards. Both work, but the added confluence just means it's a higher probability setup. That's literally it. That's literally all the strategy is. It's a fairly simple strategy. The strategy as a whole is learn to read liquidity structure. Learn to understand where retail is entering the market, which means that smart money is also entering the market. Because if retail is entering the market, smart money is entering, but they're doing the opposite of retail. So as you can see right here, when everyone in retail on the retail side of the market is buying this market right here, what smart money is doing is they are selling the market, right? They're selling the market to liquidity purge everyone through this move down here, right? So you need to understand and read and look at the market from a retail perspective to understand where smart money wants to be taking the market. Once you understand that, it's just a question of finding valid order blocks, which is something very simple to do that you can learn over time. So that's all the strategy is. Fairly simple strategy. Again, 250 likes. This will be posted in the description. And if you want to join the group where we have signals such as these, killer trades like this, it's only £100 or $140 where you find education. Also, now we have a one-to-one section where you get personalized answers from me. I've answered all of them except for these that have just come out today, so I'll be answering all of these questions. If you want to have access one-on-one to me, join the group. First link in the description. And yeah, that's about it. I've been MahadFX. I hope you've all learned something, and I'll see you guys in the next video. Thank you for watching.